Good morning, guys. Welcome to this Thursday, April 10th. And so that's week and a half has been pretty darn crazy. And yesterday we had the 90-day tariff pause, a crazy rip-roaring rally to the upside. Backing off here in the overnight a bit, so not completely unexpected. They'll see what happens. It's anyone's guess at this point as to where this goes, but at least the 90-day pause is in place, and if deals are made, chances are they never come back on again. So except for China, China is still out there being pretty much surrounded. So we'll see how the market's going to react to that. But before we get in there, deeper into that analysis, looking at the news this morning, we have CPI and jobless claims at 8:30. Both of them important. I think CPI is going to be the one to pay attention to. It could potentially move the market in light of all this volatility. It's hard to say how big of an impact because it's kind of steadily lost its luster or major impact since it's coming down to levels which are not that crazy. But if we get a hot print on that, that could certainly send the market in the wrong direction again. So anyway, so CPI and jobless claims at 8:30 this morning. A whole lineup of Fed speakers as well. 8:30, 9:30, 10, 10. Yeah, 4 speakers in the morning, a couple more in the afternoon. We have a 30-year bond auction at 1, and that's about it. So 8:30 we get my bulk of the news. A ton of Fed speakers. We have a NatGas report at 10:30, but a ton of Fed speakers, and then we have a 30-year auction at 1. So I will count on a fair amount of volatility, depending on what these Fed speakers says. You never know when they're going to create a problem, but we just have to kind of keep an eye on it. But they are speaking at 8:30, 9:30, 10, and we have speakers at 12 as well. So there you have it, throughout the day, sprinkled throughout the day. And now looking at the ES, we get started this morning. The F1 is the one we kind of had to pay attention to. It's way up there. They ran it all the way up here to this reverse retest area before they started at 5,500. Popped a little bit higher in the overnight, and then we have retraced a lot of this towards the downside. Not a lot, but quite a good 55 to 52 for like 140 points to the downside. Not completely unexpected when you have moves like this that happens in the overnight. The only question is, are we getting continuation to the downside? In other words, and watch this edge right here, 5,300s. I think that's going to be pretty critical. You see, they've been going back and forth, and on the way up, they always get stopped at the 5,300 level. And when they blew through that level and started heading higher, now this area is going to be a reverse retest area. So I would be looking for a retest of the 5,300s and looking for a buying opportunity. See if they can take this back up again. If they can't, if they are stalled and they kind of flop around, they can't take out the 5,500 and they can't go below 5,300, well, then we're probably going to start looking for a spot to build value. Now, this is yesterday's move, definitely a move out of the middle to the upside. Now, it could very well be just a bear market pop. Bear market rally kind of dynamic, which is violent, but doesn't last. So we just have to look for the continuation to the upside today. And if we don't get it, just go back to more range-bound trading and probably stay on the short side if they can't start taking this higher. But anyway, so that's how we get started. And looking to sell strength up to the 5,500s, looking to buy weakness down to the 5,300, with a lot of caution across the board, because this is a pretty crazy market. So initially, I would be looking for early weaknesses to get long to see if they can retest these highs again. The range is just so big, it almost defies the purpose, right? They had to look at it on such a big perspective, like. Getting short on levels down to the 5,300, yeah, that's a freaking 100 points. I mean, but from a usual trading day when you're like 40, 50 point in range, this is pretty wild. So starting off, to keep those numbers in mind, the 5,300 on the way down, is the one we're looking to buy against. So initially, the levels I have out here right now is going to be buying against the 53.70s, 53.80s, 53.60s, and then 53.15s for rotations back up. There could be something in between. There's a lot of white gap there, but they just blew through that way up and haven't really stalled in these areas, just kind of blown through it. So not much to lean against on this big area of space. So looking to buy against, we're trading at the 53.90s, could be a level, but I'm going to start at the 53.80s, 53.60s for rotations back up. If they take out the 60s, look for a potential rundown here to the 53.15s. And if they trade below 15s, if they close this one and goes down below 5,300, just lean in on the short side, and then we're looking at selling again. So, but I mean, given that violent pop to the upside, I'm almost thinking that we may see a retest to the highest, potentially higher, at least at one time during the day here. But the fact that they backed off a bit and they are down here and they get in the 53.80 area, that means that they're going to have put a pretty good move on here for them to run back up here and start trading up here towards that 5,500 level, which is right here, right? So the level I will key in on for a potential to maybe lean in on the long side a bit is this level here, the 54.30s. They start taking that out in the 54.40s, these two resistance areas now. I think we may have a shot at trading back up towards that 5,500 test. If they can't get up above this area, I think they are probably still going to stay range bound, maybe stay on the short side. So I'm looking for a potential retest of this high at the 5,500s. The fact that we backed off a bit makes it a little bit difficult, but it's a lot of range, a lot of volatility, and it can certainly happen. Now, the two big numbers to watch, 5,500s, is going to be resistance on the upper end, 5,300 on the lower end. So a 200-point range to work with. Let's see how they narrow that down. But to get started, given the overnight, looking for early weakness to get long against for rotations back up. Below that 53.60s, look for a rundown to the 5,300s. But I think the better opportunity is going to come in these two support areas if they come. If they don't, chances are we're going to be running it down, testing the 5,300s, and maybe even take it lower. So, but I'm going to start looking for early weakness to get long, see if they can trade this higher. Now, if we don't get that, if you start getting early strength from the get-go, they start immediately with some early strength at the open. That usually could turn into weakness in the afternoon. So that's just the nature of the weak market, early strength, afternoon weakness. But if you get some early weakness and that turns into strength towards the afternoon, I think we may be a little bit hopeful that we can take out the 5,500s and maybe make some progress on the long side of this. But anyway, so that's how we get started. And if they can't take out the 53.60s, they don't trade up above the 54.30s or the 45s, these two resistance areas, chances are we may just be staying in a range here for a bit, kind of consolidating the moves, trying to find a direction. So CPI could certainly move the market. So we have to kind of get past that one first before we really well, we got to get past one first before we can see how this thing's going to shake out. But if you get the volatile but not a big directional move on the CPI, I think we are just fall back on the analysis. Look for that early weakness, see if they can to get long for rotations back up, and just be. I would just put a lot of cautions on everything. It's just too volatile to really give you a great analysis. But yes, given the big rally we had yesterday. And the pullback in the overnight, looking for moves to the upside again, see if they can retest these highs, is probably the more natural direction to look for. But just look out for that early weakness versus early strength. If you get early weakness, I would look into buying opportunity with early strength. We get this initially run up here right from the get-go. I would be looking for short setups against these upper areas and see if they can take them out or not. But it is a pretty darn volatile scenario. And if they do take out these two areas, the 54.30s and the 54.40s, and the both of them comes out, I will be a little bit more inclined to stay on the long side of that. So that's how we get started on the ES this morning. Looking at the Nasdaq and the bonds. The bond market just signaled some heartburn yesterday, probably triggering that 30-day reprieve. But you saw here, this is the overnight on the bond market, all the way down to 112, 13, 14. They were going to fall out of bed, and they managed to stop that. Now, it could very well be the. I mean, I think the discussion was if it's big players deleveraging or if it's Chinese dumping treasuries. Who knows which one it is? But it's and the fact that they headed lower, the bond market start wobbling, then probably a good move to take a break. They also have, if everything is true, what they say, a good 70, 80 trade deals to negotiate in the next 90 days. So I think they're going to be busy. But anyway, I'm going to start off on the bond market. We are still on the short end of this. I would still stay on the short side. We are below this area, the 115.60. We are at this attractor area, 114.22. So I would start from the stay on the short side of this still, and see if they want to take this lower. If they start trading back up, the next attractor on the upside is 117.20. On the lower end of this, the attractor is 114.20. So the 114.20 attractor seems to be the closest one, and chances are they're going to trade back down here and probably stick in this range. If all these together, you see run about here at 114, 15, 16 up to the 20s is the attractor area. So I think that's where they're going to hang around for a bit while they figure out if where they're going to go in the bigger picture. So starting off thinking short side of the market on the bonds, at least to get started. We are pretty close to an attractor area, so chances are we may stay range bound right in this area. So, but you can see here we popped nicely in the overnight, been retracing quite a bit. So if they keep going lower, I would if they start taking out that 114.08, that's when I start worrying about the short side on the bonds. Okay. But other than that, looking to buy against the 114.30, 114.20s, down to the 114. Could be the 16th here, could be a level. I'm gonna put that in there, by the way. Was that usually it's pretty good. So here's the 16th, all right? So looking for that 16 level as well. So if they take out the 114.16s, the last one to buy against is 8 to 10, and below that one, bets are off again. So that's kind of the bond market to get started. And looking to sell early strength if we get it against the 15.22s and the 50 and the 116s for rotations back down again. Let's see how the bond market fares. If you keep getting a big and rip-roaring rally to the upside again, then yeah, then we probably see the indices come right back with it. And anyway, so Nasdaq. Nasdaq is trading in they were all the way up here to the 19,320 level. That's where before they started falling out of bed when they on the tariff announcement. Backed off halfway down into 18,690, it's 18,700s, and now they're back up again. I would start the same way on the Nasdaq, looking for retest of these highs, potentially higher. At this point, they're going to buy weakness. Watch that lower edge, 18,350. That's the edge which they have to hold if you're going to have a shot at this. If they take out the lower area, the 18,700s, look for a retest of that 18,350 at that point. If they're going to start heading lower below that, I think they could definitely have a shot at retesting that three-letter edge at the 350s. And on their way up, if they start taking out the 170 to 200s, I would start thinking about leaning in on the long side, looking for that retest of that high at this 370s. So it is a lot of volatility. For this one, it's like 300 up to, it's almost 1,000-point range on this range. So it is pretty crazy volatile still. And we'll just have to see where they end up going on this. But looking to buy early weakness to get started against the 830s, 750s down to the 700s. And if it traded below 700, I would just stay on the short side, looking for a rundown all the way down to that 300 level. So at that point, I'm looking for a rundown to past these levels all the way down here to that. This keeps snapping back, but it's the 350s on the downside. So So that could be, but that's good. If they take out these two support areas at the lower end of the range, 800s, it's this, sorry, 750 and the 800, 750 and the 700s, these two support areas. If the both of them comes out, I would stay on the short side and see how far they're going to take it on the downside. And I'm looking for retest of the 350s at that point. And if they on the way up, if they take out resistance at, let's see, it's going to be against the 900s up to the 19,000s. So this is the 18.9. What am I looking at here? This is the 18, almost 19,000, 18,990 is what it is, up to the 19,030s. If these two resistance areas comes out, I would start thinking about the retracement trade to the upside and running it up to test the 19,300s. But at this point, we are kind of sitting in a range here going into the news. Let's see how they fare as the CPI number comes out. We watch these lower edges. I'm looking to buy against these support areas, the 830s, the 750 to 60s down to the 700s for rotations back up. And if you take out these upper areas, and then 18,980 and the 19,030s, these two resistance areas, I'm probably going to stay on the long side and see how far they can drive this on the upside. Volatility is the name of the game, though, so it's still same dynamic as we had before. If you don't want to get into bigger trades, stay out of it, or just look for really good trade locations and just take your loss if you get it. You know, no point of over trading a day like this. It's just definitely a day like you can blow up your account if you're wrong on it. Anyway, so gold and oil. So gold trading back up again, and up to the 3150s again. So that's a retracement on gold. Let's see. See here you have it. They're back up in this upper range again. So they retrace from being way down here at this point. Back up here to these upper areas, and I would say that we are in pretty good shape to leave that split out, to stay in this range. Now watch this upper area, the 3170s. If that comes out, we're certainly going to be trading this higher. So given the overnight, I would start from the long side, just being mindful that we are up again, upping an area of a resistance or an attractor area, or in that prior range. So the upper area, upper resistance is going to start happening at the 3160s up to the 3170s. That's when you're going to looking for your short setups, and buying weakness down to that level at the 3100s. Below 3100s, start looking at the retracement trade again and back down again. So that's gold. Watch that lower edge on this guy to pay attention to. Is going to be the 3100 edge. So these two support areas, 3115 and 3110s down to the 3100s. This is 3105. Snapping back on me. Hang on. Yeah, so as you look for down here to the here's your 3105. So looking for the buying opportunities against 3120s. Well, actually, we're trading up here. So 3130s, 3120s, 3115s, 3110s, 3105s for rotations back down. So buying this whole area, and on the way up, as they run into resistance here, looking for short setups against these three upper areas. Now they could be shorts up here where they're trading right now, the 3150s being the closest one, but I would just do that with a little bit of caution. The better resistance is going to come here at these upper areas, but chances are gold may be sitting in a range here going into the since we are trading, we are right in that trading range for gold. But look at these upper areas, the 3150 to 70s. They look for short setups against those, and look for buying opportunities against 3130 down to the 3100s for rotations back up again. And then finally, oil. Back down again. So they were popping a little bit. And the oil I would just trade with a bit of caution. I think the oil is just net going to head lower. The fact that they had a big move like this and the volatility is fine. It's the but as the policies start kicking in place, these moves are just going to stay the way they are. They are going to be the the oil prices will be coming down over time, no matter no matter how they do the tariffs back and forth. So it's either right now it's global recession fears driving it, lower demand destruction. Overall, just the policies and having enough supply is going to keep driving those prices down. So I would hopefully stay on the short side on this. Look to sell strength. I would have my preferred trade right now. Looking to sell against the 61s, the 6140s, the 70s, 62s up to that 6230s. If they start taking out trading about that London high, the 6230s, I would start thinking about maybe retracing a little bit further to the upside. Nothing stops it from doing that. So I mean, you can certainly have news which drives oil prices higher in the short term, but that's just short-term stuff. So over time, it will be driving the prices lower, given all the policy changes they're making right now. So and looking to buy weakness on gold at the 60-20s, 59-80s down to the 59-50s for rotations back up. That would just be with a lot of caution, just in case the lower edge are going to stay in the range for the day. One of these support areas will likely hold. I think the last one would be done here at the 59s. So that would be the last one we're looking to buy against. Below the 59s, I think we are heading lower at that point. So looking to buy against these support areas, 60-20, or sorry, 60-60, 60-20, 59-80, 59-40, down to the 59s for rotations back up. All of them with a bit of caution, because we are kind of pointed lower on oil. All right, so that's oil, gold. So take gold from the long side. Be mindful that you are in a range right now, and if they could certainly stall right here and go sideways. And oil, I would look for the trade it on the short side right now to get started. With a caveat, if they start taking out that upper area, the 6230s, then we'll start leaning on the long side and see how far they can take it to the upside. All right, back to the ES, and okay, everything is kind of where we left it. So we have news in a few minutes, 3 minutes. I'll wrap it here for now. So good trading, guys, and I'll see you back at 11:30 for the next update. And watch out, volatility is in the air. All right, guys, later.